Corporations can be so confusing, and paying yourself can also be confusing. But in today's video, we're going to talk about different types of corporations and how to properly pay yourself as a truck driver. Whether you're a lease operator, owner operator, company driver, you can benefit from this video. So number one, you got to choose the right business structure. Now, I'm no tax accountant, but I see hundreds of drivers and I see what they do. And I've also talked a lot to tax accountants that specialize in truck drivers, owner operators, and lease operators. And this is the breakdown that I got from them. So number one, we have the sole proprietor. And the sole proprietor is a very simple and easy setup, but you're not gonna get the best tax savings. You're gonna actually pay 15.3% on your net income over there. Do they recommend that? Probably not the best thing for company drivers, owner operators, or lease operators. No limited liability protection with a sole proprietor, and it has limited tax savings options. Number two, we'll talk about the LLC, limited liability company. It does protect yourself from assets from business debts. So your personal assets are protected. So if the business ever fails, they won't come after you. Are protected on the personal side, especially if you own a home. You can actually choose how you're taxed by default or S Corp election. S Corporation is best for tax savings over $50,000 in profits. It reduces self-employment tax by splitting income into salary and distribution. So if you grossed out $100,000, you're gonna split it. I'll get into that in just 1 second. But another good thing about it is the distribution profits that you withdraw aren't subjected to self-employment tax. Now, C corporations are rare for owner operators, the best option for large trucking businesses with multiple employees. Bad is the double taxation on profits, corporation tax plus personal tax on the dividends. You pay yourself strategically, so through the S Corp method. If you elect an S Corp status, you can split your income. A reasonable salary, which goes on W-2 paycheck, you must pay yourself a reasonable salary. What is a reasonable salary? We'll get into that in just 1 second. Now, you are subjected to payroll taxes on that reasonable salary, and then the remainder of it, you're able to do a lot of deductions as a small business. Now, the second way to withdraw money is owner's distribution of profits. The rest of the profits can be taken as a distribution, not as a salary. The good thing about this is you actually save 15.3% on that portion. So let's give you an example of this, okay? So if your trucking company, or if you are as an owner operator or as a trucking company, you made $100,000 in profits, you take yourself a reasonable salary, which is $50,000. The rest of that you are going to take as a distribution, okay? Now, the difference between payroll taxes and distribution, you get to save 15.3%. Now, what does this mean on the actual $100,000? It means that you just saved $7,650 per year. Now, again, I'm no tax accountant. These are just bullet points that they gave me to talk about here. But if you do need an expert in taxes for owner operators, lease operators, company drivers, I use a company called M7 Taxes for my company in Atlanta, Georgia. They do deal with owner operators, lease operators, and company drivers, also small fleets and larger fleets. You're more than welcome to reach to them directly and say that you got the contact info from this video, or you can just comment the word tax and I'll send you over their contact info. But that's who we use for our payroll in Atlanta, Georgia, and that's who we use to consult what kind of corporations we need to set up in the US, and they did everything for us from start to finish, and I can't be happier with their services. All right, now remember, the name of the game is tax deferral, and to try to pay yourself as much money as you can while paying the least amount of money to taxes. So in order to maximize that refund or pay the least amount of taxes, make sure you get a daily meal allowance deduction. Make sure you're doing your repairs, your oil changes, your parts, you deduct your fuel. Make sure you're also writing off the lease payments, depreciation of your owned truck. Okay, so remember, guys, when you're buying a truck, it has to go into your corporation. Okay, you funnel that money into your corporation. Even the down payment you want to put into your corporation as a shareholder advance, and then you're able to withdraw that money tax-free after. Now, health insurance premiums, you're able to deduct those if you're self-employed. Retirement contribution, use the solo 401. I don't know what that means, but I'm sure the tax accountants over there know what that means. Also, extra tax hacks for those, okay, that need it. Your home office, okay? So if you have a 2,000 square foot home or a 1,500 square foot home, if you have a dedicated home office, you're able to deduct a portion of that rent or your mortgage, okay, through the business. You're able to hire family members, pay your spouse, your kids a salary, write off business use of the home. Even if you're always on the road, your home can still count. keep receipts, and use accounting software, okay? So be organized, take photos of all the receipts, and then upload them to whatever program that you guys are using. Remember, pay less and keep more in your pocket. Setting up that LLC with an S Corp election can save you thousands in taxes. Use strategic salary and distribution splits to lower self-employment tax. Deduct every possible trucking-related expense to maximize your savings. Now, if you need help setting this all up, again, my friends over at M7 Taxes will definitely be able to help you. But I'm sure you guys have a lot of questions, so feel free to mention them in the comments below. I'm Ronan, and I'll catch you in my next video.